Hello folks, welcome back to my YouTube channel. This video is going to be on a top-down analysis starting from the monthly time frame. Now once every trading month ends and a new one begins, you're going to have a top-down analysis starting from the monthly to forecast the following month what it's going to do. And then once every trading week ends and a new one begins, you're going to have a top-down analysis starting from the weekly to forecast the next week weekly trading range. Okay, so since we are in a new month, trading month, I'm going to start this top-down analysis from the monthly, and I want you to watch it carefully. So on the monthly, you want to identify your market structure, and you want to identify where manipulation has happened, and you also want to identify institutional reference points as we learned in the other video. Okay, so we can see that market structure is bearish. Okay, we've broken structure here and we are trending down. We've been trending down for a lot of months now. Okay, and before the trend started, see what happened here. We had a manipulation of this high. Institutions took retail stop losses out to pay their selling orders. Okay, and we had a shift in market structure here, so we are trending bearish. But let's look at the last 2 to 3 months, what price has done. After the shift in market structure, we can see that in December, okay, in December, this candle is December's candle. We pulled back into an order block, right here. Okay, and then price has begun to continue to sell from this point all the way down. Okay, so we know that we are bearish on the monthly, so it's ideal that we only look for what bearish, the most, let me say, the most probable trades to take intraday would be bearish setups. Okay, that's our first idea on the monthly. Okay, now that we are bearish and we respected this order block and we are going down, where would this trade or this bearish trend go before a retracement will happen? So now our Fibonacci can help us know where price may sell all the way to before we may think of retracement. Okay, so let's measure our Fib. We're going to take it from the low of this candle to the high of that candle. Okay, good. Okay, and we are going to note the Fib extension. Okay, the extension is basically how wide the trend may extend to before any possible reversal. So we know that our 161.8 extension is right here. So at least this is where price should sell to before starting any major retracement to then come later to the other block that we have here. So this other block is not going to be retraced, it's not going to be put back into immediately until it has reached the extension. We don't expect this other block to be traded to yet. Okay, so we can continue to look for sales to reach the 161. Okay, the 161.8 extension level. So this is our first idea on the monthly. Now let's draw down to the weekly to see if price supports the idea of selling all the way down to that level. But before we go down to that level, I want us to note if there is any trend line that we can connect here on the monthly. I'll be combining both smart money and then trend lines. Okay, but looking at the monthly, we don't have any clear trend line. Okay, not any clear trend line. So we will go down to the weekly and then forecast what the weekly has done. So going down to the weekly, things begins to become clear. Okay, so we've hit this monthly order block and we are selling. Okay, we are selling. We have a shift in market structure here, so the weekly too is bearish. So is there any need for you to be looking for buys? Not really. The most probable trades will be what? Sells. See how we've been selling for all of these weeks. Okay, all of these weeks selling. So we know that from the weekly we are bearish as well. And then we can, I think we have a clear trend line on the weekly here, so we can join this high okay. And when you are drawing trend lines, okay, the best trend lines is the one that has at least 3 touches. That's what makes a trend line strong, okay. So we have the first touch, the third touch. This is a very valid and a strong trend line, okay. And you see how it is connecting to our institutional reference points, okay. So now we can connect the low of our trend line, okay, the lower point. So we can connect the lows. We have this low here, this lows, very good, very good. So now we have our trend lines connected, okay. And as I said, this is the extension, the monthly extension that at least I'm expecting price to at least sell to before any major retracement, okay. So we will still be looking for sales, okay. Looking at the weekly, we are bearish. There is no sign of bullishness yet, okay. So we still be looking for our sales until we touch the 1.61 retracement level, or even the trend line, the lower trend line, okay. So let's go down to the daily for more information. So going down to the daily, you can see that before this whole trend began, we had a nice manipulation to the upside here, okay. We cleared all these equal highs, beautiful, and then we shifted market structure here, okay, and then we are selling. So now how far would this trend go before a pullback? Now we can measure on the daily as well, from this low to this high, to know our extension, okay, to anticipate where we may pause our sell positions. So from here to here, let's look at you can see that it also matches with the weekly extension. So at least I'm expecting price to sell to the 161.8 retracement level, okay. At least the extension, the fib extension. Let me get rid of that. So do you have any trend lines that support this idea? Before we go to the trend lines, let's look at our institutional reference points. You can see that on the daily we are bearish, right? You see I've been breaking structure, very beautiful trend, okay. There's no need for you to be looking for buys. You take a swing sell and then you hold it for days. That's the best. You see how bearish we are, breaking lows, and how we've been respecting other blocks, okay, and then fair value gaps as well. See, okay, and then we've respected this other block like twice. Okay, there's a fair value gap. Let me use the fair value gap here. Okay, good. So very nice, okay, very nice. And we have this trend line that we can connect all the way from here, the highest point, and then we can connect this little highs. Let me zoom, okay, and extend it all the way down, and you can see we are having another touch of the trend line there, okay. And the touch of the trend line is also giving us something very beautiful here. Let me get rid of this fair value gap. It's giving us something very beautiful. Let me show you. Institutional manipulation of this short-term high, and then a daily order block, okay. We hit a daily order block. Before that we had a manipulation of that high. So let's see if we had 4-hour and 1-hour support of the sales, so that we can take sales to this level, okay. The one says 1.8. so let me go to the 4-hour first. So going down to the 4-hour, you can realize that price was bullish, right? Price was bullish going to the trend line, okay. It was bullish going to the trend line. It went to this trend line, manipulated this high, hit the daily order block, and then we break this trend line. We didn't only break the trend line, we also break market structure, which is very important. It's not just about trend line break and retest. Market structure is also important. So we break this trend line as well. Before that, we also manipulated this equal highs here, as well as this equal high, this swing high, So very nice manipulation. And as I said, whenever you anticipate a big price movement, anticipate some liquidity run. Okay, so we've run 2 beautiful liquidity points, break of trend line, shift in market structure on the 4-hour. Okay, taking our Fibonacci retracement from this high, okay, to this low, we can see we've retraced towards OTE, optimum trade entry, above 55. Above 55, what do we have? We have what? A breaker block right here. I taught you in the institutional reference points, the breaker block. This is a breaker block right there at premium price. Let me get rid of the fib. So now that we hit that level, we can look for structure shifts, market structure shift on 1 hour or 15 minutes to look for sales, and then hold it all the way down to this level. Okay, hold it all the way down to this level for a swing trade. Let me go to the 1 hour. You know, as you can see, before price retraced to the 50% retracement level in the 50% retracement level to the breaker, we were bullish before going to that level. Okay, we were bullish right here, but the structures are not clear here. Let me go to 30 minutes, and the structures are quite clear here. Okay, so we had this trend line, beautiful trend line that pushed price as well to that to the 4-hour premium level, 50%. And what I see here that is very interesting and beautiful is that we've broken market structure here. So 2 confluences, you've blocked my tongue, bro. You've broken this trend line, you've broken market structure. Okay, beautiful. Before the break of market structure and the trend line, we had a manipulation of this high, short-term high. And as I said before, any significant price movement, anticipate what? A liquidity run or a liquidity purge and revert. So this is beautiful, a very beautiful confluence. So now that we have all these confluences, I'll look for a retracement within this leg. Okay, so let me go to 15 minutes to see my institutional reference points above 50%, where I can take my sales. First of all, we have this order block. When price come there, we can take sales, but your stop loss is always above the high. Okay, always above the high. We also have this other block as well. Okay, and then above that is a little fair value gap. Okay, let me mark the other block well. Okay, above the other block we also have a little gap above it. Okay, anywhere within these areas are good for taking sell up entries. Anywhere at all, anywhere within those areas are good for taking sell entries. Okay, so when price retraces to the level, personally I'll take my entry here. You can wait for this and price will use this and you will miss the move. I'll take first entry here, stop loss above the high. When price comes to this level, I'll take another entry, stop loss there. If price comes to the fair value gap, I'll take another entry, stop loss there. Okay, for TP, first target is the low hanging fruits. This is the low hanging fruit for target. And then the second target will be that the swing targets, the swing sales that I'm anticipating all the way to the 1.618 fib retracement level. Okay, that's what I'm anticipating. So this is how we do a top-down analysis. I actually shared an entry on this 75 today. I was anticipating that price will use this order block paired with this breaker block for entry. My stop loss was just above this high. Let me show you. yeah, this high, and I got stopped out because we were in a trade quite earlier. So now that we've had this beautiful manipulation, we have further confirmation. Okay, beautiful breaking market structure and all of that with nice displacement. Our sell this thing is 100% confirmed. I promise you, if you take this sell, you never hit stop loss. At least your first profit target will be hit. This first profit target, at least will be hit. So if you had a chance to watch this video whilst the trade whilst my price is yet to move to that zone, check quickly and try to see if you can have an entry. Okay, all right, so that's how you do a top-down analysis. I'll be making more videos on top of that top-down analysis so that it becomes much clearer to you. So you can analyze the market top-down within just 5 to 10 minutes if you know what you're looking for. Yeah, and as I say, you don't have to start from the monthly all the time. You only start from the monthly when a new monthly trading period begins. Then you only start from the weekly when a new weekly range begins. Okay, once you forecast the month, you use it for the rest of the new month that you are in until a new month begins. Once you forecast for a week, you use it for the entire week before a new week begins. But for a daily analysis, you need to be doing it every day, because every day a new candle opens and ends. So you have to analyze how it ended, what zones it reacted from, was there any manipulations and all, so that it will help you forecast your 4 hour and your hour and your 1 hour. Okay, so that's it.